Recording stopped.
Welcome to the German Climate Pavilion at COP29 in Baku. Germany. Climate solutions, fast and fair.
Good. That is working. Now you will have to listen to me. I found a mic that works. Well, good afternoon, everyone. It's my real pleasure being here with you today and moderating this high-level event. My name is Barbara Buchner. I'm the Global Managing Director of Climate Policy Initiative. And again, I think this area that we're going to discuss today is of immense importance. We all know that we need to, and I think we've heard Gutierrez talk about the clock ticking yesterday. We need to fill the investment gap and really make sure that we get on a pathway towards 1.5 degrees by 2040. So we can do that only by really thinking about how can we mobilize private capital at scale for emerging economies in developing countries. So I think the challenge in front of us is clear. We know that there is not enough money going, particularly into emerging markets and developing countries. And we also know that we need significant, predictable, and continuous financial flows that go towards all sectors and all types of regions in the world. We also know that the liquidity is out there. We know that capital is not an issue, but it is remaining at the sidelines, particularly if you're talking about climate action, again, in the global south. And I think this is where the role of guarantees becomes vital. And I think this is why we all know that guarantees actually provide a real opportunity for unlocking private capital for these types of countries. So for me, while we are talking about the challenge, it's also about the real opportunity of how can we use instruments more effectively to really make sure that we can unlock the investors that currently are just not yet in the right geographies. So very briefly, I think we are going today to talk about talking about guarantees. Again, the Green Guarantee Group has been launched in order to address this issue and really understand the role of guarantees in unlocking capital at scale for climate action in emerging markets. And we know that guarantees today are still an underutilized tool, but at the same time we know that there's lots of experiences out there and lots of innovative approaches that are being piloted at the moment. So we do hope that this Green Guarantee Group really has a role to play to help scale guarantees and make sure that the landscape of green guarantees is much larger when we look at that in the coming months. So with that, I think we will the discussion today will collectively focus on thinking about how can we make guarantees more effective, how can we standardize, how can we coordinate better, and how can we really together work towards getting to the scale that's needed. So with that, I'm very happy to be inviting our keynote speaker to join me here on the panel, and it's a real pleasure to really thank Minister of State for Europe and Climate, Dr. Anna Lührmann from the Federal Foreign Office of Germany to provide the keynote speech. So the floor is yours.
Yeah, thank you very much, dear panelists, dear guests. It's really a great pleasure to be here today and to host this event together with Hans-Henrik Röller, the chair of the Green Guarantee Group. And actually, to be honest, I've attended many events during the last days on climate finance, and the issue of guarantees has always been at the top of debates. So I'm very happy that we host this event, that we have this engagement here on this subject. So I really see this COP as an opportunity to bundle our common efforts and to accelerate the green transition. It will be a long and challenging part, of course, but we've already made some steps in the right direction. And I just had an event here earlier today with leading actors from the private sector that are very keen to help in unlocking additional finances and to help that the green transition really takes off. Obviously, there's limited fiscal space for investments in the green transition in many countries, and this really underscores also the need of the private sector to be part of this. At the same time, we can see that capital costs for private investments are high, especially in emerging markets and in developing economies. This leads us to a situation where currently over 85% of green investments are taken in developed countries and in China. We need to work together to enable broader and stronger investments also in developing countries. So why, from the German government's perspective, are green guarantees now part of this equation? We think they can help to balance risks and to overcome insufficient funding for green investments, especially in emerging markets and in developing economies. Guarantees are cost efficient, they can mitigate risks, and by this also mobilize private climate finance and boost private investments. However, the reality shows us that this tool is rarely applied, especially in developing countries. Reasons for this are manifold, and many of them already came to light during the expert panel meetings that the Green Guarantee Group has facilitated. Let me pick out one of them to give you an example. In developing countries, there's a high demand for green energy projects. Many concrete project proposals are ready to be implemented. They are in a bankable ready stage, but IMF requirements are strict on new debt. Countries need private investments to fill this gap. However, for many private companies, green investments in developing countries seem to be perceived as coming with too high risks. This is why we need governments who do have the capacity and also development banks to mitigate risks. And they can do so by providing guarantees for blended finance projects. We need more projects that exemplify energy transition projects in developing countries do work and they are profitable and the risks are not too high. Currently, green guarantees are hardly deployed in developing countries. One problem is the very fragmented landscape of guarantees. To give you an example, the Climate Policy Initiative has identified 52 cross-border instruments from 34 key entities that are currently available for developing countries. 52. At the same time, existing guarantee schemes are often considered complex as they vary across institutions and are subject to differing underlying policy regimes. And this is why Germany has created the Green Guarantee Group. Over the past year, and careful, now a new acronym for you to learn. COP doesn't work without acronyms, right? So GGG is the new one for you, the Green Guarantee Group, GGG. It has gathered experts from various backgrounds, governments, multilateral development banks, development finance institutions, private sector, think tanks, science, civil society, and others to exchange ideas on the topic of green guarantees. Since March, the GGG and experts have done so and done some work to build more understanding on the types of guarantee mechanisms, the involved stakeholders, and how to better access and apply guarantees. Given the high interest and the urgency of this topic, we have scaled up this initiative some weeks ago. One important brick in the GGG wall was to appoint Professor Dr. Lars-Henrik Röller as the chair of the group. I'm delighted to host this event together here with Mr. Röller. And I'm also very happy to have Barbara Buchner from CPI here with us, bringing in her expertise as an excellent moderator. And not at the very least, I'm very grateful to have such great panelists and also, I believe, a very interested and focused audience with us. Very keen to hear your views and exchange ideas. It's such an opportunity to gather really diverse stakeholders and wish us best of luck. Thank you very much.
Thank you so much, Minister of State. I think excellent points, and GGG, like so. Just the first task for everyone, remember the acronym, GGG. Very important. But with that, it's my real pleasure to introduce the chair of the Green Guarantee Group, Professor Lars-Henrik Röller. Over to you.
Yeah, thank you very much. Let me welcome you again, and very grateful for your comments. I think you made many of the points already. The GGG is something we want to push, and I think it's a very important instrument, and we're very much looking forward also having a discussion with you today on which direction we take this, because guarantees is not a new instrument. It's been around. There are lots of initiatives already. I'm fully aware of that. We don't want to reinvent the wheel, but we do think there's quite a bit of potential there, also with the CPI. And with my distinguished colleagues from the ministries who've initiated this, the Foreign Ministry and the Economics Ministry, to take this forward. And I'll give you a little bit of a view of the areas which we think things could be done to improve. And then I think we can have a discussion, and you can have some feedback on that. I think sort of the motivation the State Minister has given that, obviously, I'm an economist. I've been with the German government before. The fiscal space is small, and I don't think it's going to get any bigger. I think maybe a little bit bigger, but I think we do need efficient use of private sector, which is something which we've been discussing for many, many years already. So this leveraging and getting in the private sector is very important. Now, if you look at this particular issue of EMDE countries, as the minister was saying, 90% of the investment in climate is not in those countries. So obviously, if you believe in the 1.5 degree goal, I think this is a very, very important thing. And we need to get the private investor, private business, private sector involved. And we need, as has been said so many times at this conference, you need a business case. This sounds very nice, and I was actually also at BlackRock for 2 years. I'm not at BlackRock anymore, where there's quite a bit of money, and the idea of how can we get that money into the sort of important things with respect to climate neutrality and climate fairness is something I feel very strongly about. But it's not really, it is working, but I think it can be improved, and that's why I'm very happy, by the way, to chair this initiative. So let's do something with it, and I'm very happy to do that. I think also the other point, besides the leveraging with guarantees, I think working pretty well. I think it's, depending on how you account for guarantees and budgets, as I was saying before, it's a relatively efficient way with scarce budgets, as was said before. So I think it has this double whammy. It's good for the budgets, and it has a big impact potentially if we do this right. So the GGG is going to move forward with 3 outputs next year. We're working on some ideas of how we can improve things. And we've been discussing with the technical expert group, which my colleagues have been doing, where things can be done differently. How is risk measured? What kinds of risks are insuring? Where are you? The importance of local markets. So we've developed some initial thought, which is published today on the internet, on our web page, of where we think things could really be improved. So I would like to urge you, if it's possible, to look at that and maybe give us some feedback, because we do want by next year to make some practical proposals. I'm a believer in stepwise improvements. We're not going to dramatically reform everything, but if you help us identify some very practical things which we can do to leverage the instrument of guarantees for EMDE countries in the area of climate, we'd be very interested. We would then finalize this report by COP next year, and I'm also in touch with my G20 colleagues, South Africa, because it should also play a role, perhaps, maybe not at the heads of state level, but at the ministerial side, of doing some things, how we can improve the role of guarantees. So that's the second. So that's the first thing. We'll propose some policy. Second one, and I've been having some discussions here with some people who have quite a bit of influence, lighthouse projects. So if you have some idea, what the minister was saying, something which is not that bankable or close to being bankable, but could be pushed over the goal line, as we say, through the use of guarantees, which shows the effectiveness of guarantees, we are very open for that. So we're looking for a number of lighthouse projects which we actually don't have money. The GGG doesn't have money. I should have said that in the beginning. At least I don't have money. The German government, of course, has money. But we are going to push politically these projects over the finish line. We are also thinking, Minister, next year to have a high-level political group of some individuals who will give next to the technical group, which is also there. So we're also open to have people join the technical group, identifying how we can improve things. We'll have a political group next year, subject to approval, where we push these political things forward as we go on next year. So that's the second one, lighthouse projects. And the third one is we want to create a marketplace landscape together with CPI of how guarantees are actually used in many, many different ways. So that's the working group agenda, if you like, and we're very happy to get some input from you on that. Let me spend 1 or 2 more minutes on those areas, which we also find in our, we call it scoping paper, initial thoughts of where we think things could be improved. And I know some of you may be already in the field, and we have sort of looked at 2 areas. One is more sort of, I don't want to say technical, but more sort of administrative things, and that relates to areas of data, transparency, data availability. Lots of people talked about that can be improved. There are some databases, the GEM, which are being developed, but there could be more in terms of transparency, because when you price risk correctly, you need to have appropriate information. It needs to be transparent enough. So this is an area which is mentioned all over. We need to do more on that one. The other one is the capacities, the local capacities for using, because the instrument of guarantee can be technically, depending on the risk which you're looking at, to get the investment, to get the private investment over the goal line, as I said. You need to have capacities on both sides, local levels and also in terms of the ones who are administering the capacity. So there's talk of, we'll be discussing that, on maybe a more standardization or templates for the usage of guarantees, depending on which risk we're talking about. Again, this is very heterogeneous at this point. So data, capacity, and then complexity. I think there's a big issue about transactions which involve guarantees being rather complex. Reporting guidelines and a number of things which can be improved, which depends also, of course, on the institutions you're talking about. MIGA, of course, at the World Bank is a good example of how the instrument of guarantees, if I understand this correctly, across the World Bank has been coordinated. So this is one area, data, capacity, complexity. Can we do better to use instrument of guarantees? The second area, which are more broader, policy one, is how risk is being analyzed and priced. Obviously, this is a big issue. Here the question is, is the risk priced properly? And this is a big issue. Are we fair in terms of assessing the risks? And also the role of, for example, rating agencies and other in terms of assessing the risks. So the whole idea is the market for risk pricing working well. Maybe it is, maybe it isn't, but I think it's very important. It is not. Okay, thank you. There is an issue of a legal framework also, how guarantees are treated regulatorily, I should say. This gets you a bit into the finance issues of things, the regulation of guarantees. I'm always been somebody also in Europe who said, let's make it favorable towards guarantees. In Europe we have state aid, of course, guarantees are state aid. Let's not overdo it in terms of being too harsh on guarantees, because I think it's a better instrument for many of these issues than the alternative, which is credit or grants or equity. Those are the other instruments which we should talk about. Local capital markets, okay? Currency risks, local capital markets. I've learned a lot about that already. It seems to be extremely important. Also the local development banks, the national development banks, who are closer to the customer. Of course, there's a big issue about multilateral versus regional and national development banks. I think national development banks play an important role, it's my hypothesis, in guarantees because they're close. But of course, they have to also have a governance, if I may use that word, which is transparent and efficient. So I think local markets is an important issue. Then there is the coordination issue, which I said that I was, as an advisor to BlackRock, and I was trying to get private money into public. I should be careful because this is public, but these are two different worlds. When you talk about the guys who are running the investment funds, billion, and the public side who is careful about spending taxpayers' money, which they should. About speed and working together, I don't need them. If it's a profitable thing, I can do it my own. It's just and we've had also in Germany, by the way, also for the German economy, that issue, how can we use money from private sector in innovation and startups. And so these are two different worlds. And I think both sides need to have a little bit of a mind change, if I may say so. And I'm not going to have time to go into that, but I think it's a very different way of thinking about it. If you want to work with the private sector, you're enabling the private sector to make money. Okay? That should not be a problem. And the private sector has to also deal with the public sector because they're, after all, spending taxpayers' money. So I think, but there's an obvious win-win situation there, which let me not talk about my experiences, but which I think is an important issue, also with the role of guarantees. And then there are other issues of resource mobilization, crowding in, additionality. Are we crowding out private investment? This is always a big issue. Nothing new, but I think when we use guarantees, we have that issue as well. I think we should be mindful of that. And the additionality, I'm almost done. The additionality is you want projects which wouldn't have happened otherwise. And you also need to think about public resources. If you're just moving them from equity to guarantees, we want additionality because we need to solve the climate crisis. Only get this with additionality. And there's geographical coverage, which you said the risk, be interested in the risk is heterogeneous. The risk is not the same in every country. And the analysis of that, risk analysis, geographically, is something which is very important. So those you will find in our paper, and I'm looking forward to the discussion. Thank you very much.
Thank you so much.
Where do I sit?
At the end.
I sit.
Yes. Wonderful. Well, thank you so much. Lots of issues. I think what I want you to take away from, I think, what Lars Henrik has just said. First, lots of challenges, lots of issues to unpack, but a real opportunity for all of you to help us in a stepwise approach, think about how can we improve things. So I think this is a real opportunity to then also come in and share your thoughts and be part of this discussion here. But again, we have a fantastic panel here that will help us unpack and solve all the issues that Lars Henrik has just mentioned. I have full confidence in all of you. So we have experts with expertise in finance, in government, national development banks. We've heard about that, but also how to price risk and think about private sector more. So let me please invite my panel up to stage. We have Ivan Oliveira here, who is the Undersecretary for the Financing of Sustainable Development at the Ministry of Finance in Brazil, and certainly a big leader this year with G20. We have Olga Skolevaskaya from the World Bank Group, who is the regional head of Central and Eastern Europe and Central Asia from MIGA, extremely important partner, obviously, on guarantees. We have Anthony Hopley, who is the Deputy Chair Climate Risk and Resilience at Howden Group, certainly one of the leaders in the insurance industry in this context, and also the high-level champions enabling insurance breakthroughs. So I'm sure we're going to hear more about that. And then last but certainly not least, we have Nabil Kadri, who is the Deputy Managing Director of the Brazilian National Development Bank, BNDES, and again, an extremely important player in this field. So thank you so much, all of you, for joining me today again. So I'd like to do 2 rounds of discussions here. We now have space in the front if people want to join us here. So I'd like to do 2 rounds of discussion, following a little bit what Lars Hendrik has laid out around standardization and then around coordination, getting your reflections, your experiences, but also your suggestions. Again, this is something we want to work on, so we need your inputs here. And after the standardization, we go towards coordination, and hopefully we'll have some time for reflections from everyone here. But Yvonne, let me actually start with you first. Again, I think we've heard a lot, about the challenges of standardization. You've been leading a lot of work this year under the G20, and congratulations again for all the initiatives that Brazil has launched, also amongst others with support of Bendesa. But love to hear your reflections a little bit on how could standardization help accelerate even more climate action in Brazil, and what would be ways that you think could really help there. So over to you.
Thanks, Barbara. Great to be with you. Let me thank Germany for all the support in our G20 endeavors this year. In fact, it was quite interesting, and at the end we could really deliver very concrete agendas of reforms of the EMDE system, of the green funds, and great to have Barbara with us because she's also very entrenched in our G20 deliverables, including one that is well connected to guarantees, where at the Sustainable Finance Working Group, and I see Dirk here, we could explore the agenda on how to think about instruments and better understand instruments to finance nature-based solutions. As we know, a lot of challenges in order to finance nature, and what we can see out of Barbara's and her team great work, and it is right now in CPI's webpage, a toolkit of instruments to finance nature-based solutions. And out of those, definitely guarantees are quite well placed as a key instrument that should be better used by developing countries when assessing how to make nature-based solutions projects come to fruition. So great to be with you here. And on the specific task, let me just try to connect that to some of the G20 deliverables. And there is especially a very important one when it comes to the MDB roadmap for bigger, better, and more effective MDBs. We have 44 actions there. Out of those, 26 should be implemented in up to 3 years, in a document that has been already endorsed by the Ministers of Finance and should be endorsed by the leaders in Rio next week. And right there, there's a clear push for the banks to use better the instrument of guarantees. And also, in that sense, also to connect better to the agenda of standardization in a way that they can facilitate the clients' lives. So instead of having so many different instruments, and we've been seeing some new and interesting agendas, including at the World Bank, where the idea of the single guarantee platform and how to better connect what the instruments that the World Bank has offered to the world. But what is critical here is really simplifying things is absolutely important. So, and it is there, again, entrenched in our MDB roadmap out of the G20 Brazilian presidency for implementation now. Another critical point there, and I'd like to reinforce that, it has to do with this agenda of, foreign exchange risks. That is maybe the critical risk, if you bring it to one single risk, on how can we really boost private sector mobilization to finance transition in developing countries like Brazil. And in that sense, Brazil has created a new instrument that's part of it has to do exactly with that. Right now it's being implemented in Brazil, that is called EcoNinvest. We have part of it that has to do with blended finance lines, financed by the Treasury, but part of it has to do exactly with FX risk mitigation. So the Treasury, together with MDBs, is flexing muscles in a way that we can build an instrument where the long-term investor to Brazil, especially connected to green investments, can really have a guarantee at the end of the day from the Treasury that if a fluctuation in our currency goes beyond X, the Treasury is going to come and cover that. So we have also discussed a lot of that in the G20 task force on climate. We have prepared a note and based on our EcoInvest program so that other middle-income countries could also move in the same direction. So efforts and joint efforts, including with Germany, in that sense would be quite welcome. But also there's a critical point here is that, especially for smaller countries with less developed institutions, less developed markets, how could we think about something that could also deal with those risks that are critical, especially for private sector mobilization, but help them deal and tackle those risks in a proper way. So something that we've been exploring, and Avinash Perso has presented that at the task force, is maybe creating a hub or a fund that we could distribute a little bit that, and maybe bringing some guarantees connected to FX risk to some specific countries according to some specific needs for green investment, for example. So simplification is critical, harmonization is critical, is there, well connected to our G20 deliverables, but we need to scale things up. And in order to do so, definitely guarantees, as Barbara has shown us in her paper, is a very important instrument. So more than happy to see how Germany is flexing muscles now with the GGG. And just a final point is we have just launched the Brazil Climate and Ecological Transformation Investment Platform. It was launched in DC on October 23rd. It was relaunched here with our Vice President just a couple of hours ago. And with this new platform that is based on strong country ownership, flexible, adapted, well connected to our country's needs, we have BNDES at the core of the platform as the secretariat of the platform. You can go to gov.br/BIP, Brazil Investment Platform, and you can see the information there. But maybe we could find some lighthouse projects there, in fact. We have 7 projects, $10.8 billion in total. And definitely for some of those projects where essentially we're talking about private sector projects. So guarantees could maybe apply quite well to some of those. And our task is really to go to COP30 in Belém 1 year from now with maybe 3 or 4 times the total mobilized amount through the Brazil investment platform, and really show to the world that the platforms can work, that can be country-owned, country-led, really prioritize critical projects with a critical alignment to the national planning. That's what we could do in Brazil, really taking out of the plans the sectors and subsectors that are really most need of international money, especially international private money, and we want to use the platform to make those projects come to fruition. We have projects like in green hydrogen that are 3.5 billion, we have projects in biofuels and SAF that is 1.5 billion. We have smaller projects in nature-based solutions too, 120 million, for example. So there is something new going on when it comes to platforms. Brazil has just delivered, and guarantees should definitely be a very important instrument to make some of those projects come to fruition. Sorry for taking too long, Barbara. Thank you.
Thank you so much, Ivan. And again, I think there is so much that you can share. So I think, and there's actually a lot that also then leads already to the second point around coordinations in country platforms. Extremely important for the coordination point as well. But I think really appreciate that you actually already show some solutions. And I think it makes us think, and as we are gathering over the next months, like, trying to improve the landscape of guarantees, but also thinking about the lighthouse project. So I think it's really good to hear that from you. And we might hear something more about the EcoInvest from Nabil as well later. But Olga, let me come to you. I think Ivan already talked about the importance of going to scale. Certainly Amiga, I mean, you are the ones who have should be working yet. You have really the experience around guarantees and what works. And I would love to get your reflections on how to make them more effective, and whether ways of standardizing risk assessments or project evaluations could help guarantee-backed investments become more effective. So over to you.
Thank you very much, Barbara. And it's a pleasure to be here. Thank you for including MIGA in the event. And just to maybe spell it out for some of you who may not know, MIGA, it stands for Multilateral Investment Guarantee Agency, part of the World Bank Group. Until the 1st of July, MIGA was the largest multilateral provider of guarantee products in the emerging markets. Political risk insurance and credit enhancement products. And I think Professor Roller and also State Secretary mentioned the guarantee platform from the 1st of July. The World Bank Group on the 1st of July launched a guarantee platform which combined all guarantee products of the World Bank Group, all guarantee products for the public sector on the platform housed in MIGA. And I think the state minister mentioned 54 different guarantees, right? That the survey,
We know there's more out there, but that was like
probably.
the initial.
So just for comparison, one of the reasons why the guarantee platform was created, because there were 17 different guarantee instruments, products in the World Bank Group. And so the platform was very much launched in response to feedback from the market and the findings of the private sector investment lab that the president of the World Bank, Ajay Banga, launched in 23. That there is scope for simplifying, streamlining, improving client experience and the effectiveness of guarantees. And so the guarantee platform is very much that the vehicle for coordination and harmonization within the World Bank Group, and also a vehicle or a way to scale up the use of guarantees. And so what the platform allows us to do more than we were able to do before is to combine different products. And in fact, think of which products are best suited for which type of products, combining them in ways that leverage sort of the minimum amount of public capital necessary to scale up coverage for projects. So that's just what we are doing in the World Bank Group, but of course more needs to be done in the MDB community. And maybe I just spend a few words on what you asked in respect to why is that important? Why do we even talk about standardization, right? So, I mean, clearly, standardization and harmonization of methodologies for risk assessment, for instance, helps ensure comparability, consistency, and transparency across projects and across investments, and that really gives confidence to investors and help increase availability of private capital. When we talk about green investments in particular, standards such as, for instance, climate bonds or sustainable investment fund methodologies, right? To the extent that they're consistent, that can help increase pools of available capital beyond just banks, right, or equity sponsors, and essentially lower the cost of financing. And I think another important point about standardization, and several of you mentioned that or touched upon this point, is really the building the capacity, knowledge transfer, and just ensuring that is increased. So more training, but also training on standards that are across more consistent. And so the question on the gap, what can be done right now, there is indeed gap, or more needs to be done in harmonization of standards across different institutions and different geographies. Maybe just a few words on the MDBs. And that sort of maybe touches upon coordination. But MIGA, as part of the World Bank, is part of the MDB community that coordinate methodologies on Paris alignment, on climate, and also on environmental and social sustainability. So again, there are sort of additional forums there to bring development finance institutions into the fold, so to say. But clearly, that's an important work, an important step in the direction of coordination and harmonization. Thank you.
Olga, and I think this is certainly, I think in the GGG, important that we are not only talking to, individual institutions, but that we bring the coalition, so like, like the MDBs, like FIX, like the Finance in Common, like IDFC, like others. So I think something to come back to then when we come to the coordination in depth. But Anthony, again, we've been talking a lot about potential for standardization to enhance the use of guarantees, especially in the areas of risk assessment and risk pricing. Obviously, insurance industry, this is where the actual knowledge is about pricing risks. So over to you for your reflections.
Well, thank you, Barbara, and thank you to the Green Guarantee Group for inviting me here in the German Pavilion. Actually, could I just ask, I like also getting this message out on social media, and when you're on the panel, it's difficult to take pictures of yourself on the panel. So if anyone takes a picture, is willing to share it with me, I would be really grateful. So that would be great, and I'll tag you in my social media. But look. First, I want to be a bit controversial. But first, this is a brilliant and critically important initiative. We need a massive scaling in the availability of green guarantees. But it's a little bit like, look, I want to get a bit active here. It's like this stool, right? This stool. The 4 legs, or three if it was a 3-leg stool, are essential. You need that leg. The green guarantees are one of the legs of dealing with risk. But it's just one of them. The stool is going to fall over unless you think about all of the legs of risk. Okay? Without killing anyone, I'm going to put this back. I just wanted to move. I've been sitting down too much. The insurance industry is a fundamental part of finance, but it has been missing in action. It's been at the back of the bus. No one thinks about it in the top-level conversations. I have lost count of how many conversations we have where we talk about risk in finance, but insurance are not even at the table. I think what is exciting about this COP29, is it is the first international climate negotiations where we're talking about the role of insurance. Does that strike anyone else as strange? Because it's the insurance industry that is the one that is meant to sort of be there to protect us when we deal with risks, when things go wrong, when you lose money, whether that's physical or economic. Insurance, we've forgotten, is the fundamental foundation of almost every capital stack. Yet it is always thought about at the last minute, and it's become very commoditized. It's become an annual procurement exercise. Has anyone also thought about why, when we know what is coming down the road, whether you are a finance minister, whether you are a non-executive director on the board of a company or a C-suite executive, or you run a portfolio or you sit on an investment committee, when you make that decision between that investment over there that's got a 3-year return on investment, and this point was made very clearly about making money, and that investment over there that has a 5 or 6-year return on investment, but that just makes the problem worse or doesn't deal with mitigation, adaptation, or doesn't protect nature. That investment does. But you know at the moment, the way the system is structured, almost everyone is going to make that decision and on a purely financial basis, which is 90% plus of all of those business and investment decisions. Yes, there are some who make money, whether that's philanthropy or MDBs and DFIs, that have a slight policy kicker, because all of that data we have, all of that information that we have, is not being converted into the one language those decision makers speak when they make that decision, which is dollars. It's all qualitative. It might as well, TCFD, TNFD, ESG, all the data we have at the moment might as well not exist. Because it's a Tower of Babel. It's speaking a babel of different voices to the language that decision makers speak. And the one industry in the world whose job it is, that is data driven, whose job it is to take that data and translate it into a cost, the cost of basically compensating you, providing you with money if that event happens. The Spanish government have just discovered that, times 100, because they didn't spend on the things that would have protected them from what has just happened, and now they have got to spend billions. That finance ministry didn't have a contingent cost curve on those climate risks, because that decision with public money, I almost guarantee you if they'd had a cost curve on the potential costs that they were going to have to pay when these events come home, which we know they're going to, they would have made a very different decision in terms of deployment of public money around the sort of adaptation, resilience, and mitigation, because true resilience is mitigation plus adaptation. So in London, which is one of the biggest financial markets in the world, 40% of the capital that is deployed in the London financial market is contingent capital through the insurance market. So it's a fundamental part, and we've forgotten. It's about 30-odd% globally. That is trillions upon trillions of dollars sitting there that could be deployed through, and actually probably pricing risk on a much more effective, efficient basis. Because what finance tends to do when they price risk is a bit like a doctor who doesn't know what the underlying cause is, so they just give you a multi-spectrum antibiotic. Whereas what the insurance industry do, they're like a doctor who will actually investigate, and they will say, well, actually, it's these particular infections you've got, so I'm going to give you some very specific antibiotics. And so overall, that would reduce the cost of capital. It would mean we are pricing it more effectively. It will also mean we've got a forward price signal. So I guess my plea would be two things here. Think more broadly about the role of insurance and the paradigm shift we need in the insurance industry, not just the insurers themselves, but all of us who use insurance and demand that from insurers. So it needs to be more longer term, more strategic. And I think both sides have to understand more, because I think the good news is 70% plus of the insurance products exist. And if you were working with insurers to insure many of the underlying events and risks that could happen, the green guarantees themselves, we could leverage a lot more money into those, but also the cost of those green guarantees could be reduced as well.
Thank you so much. And again, I'm very... Some of you who might know me, I continue to say over the last years, it's nice to have the insurance sector in the room, but it's not at the table. I feel like this is the first COP where the insurance industry is finally at the table. And I think it really is an opportunity again to see how we can actually use all the skill sets that the insurance industry brings in order to help standardize, in order to help price risks more efficiently. So I think there's a lot we need to follow up to. But Nabil, let me come to you. Again, Bandasa, we've been talking about the key role of national development banks, and obviously Bandasa brings huge portfolio. So I'd love to hear just your reflections, again, in the context of standardization, or any examples you have, or any lessons from your work that you would like to share.
So, dank für Einladung. I think it's in German. Thanks for the invitation for this panel. Barbara, it's a pleasure to be here again with you. Another COP, another discussion on today about guarantees. But I must say, you said about the insurance. I will talk just a little on it before I start my point of view on the guarantees. In Brazil this year we faced a very hard time in Rio Grande do Sul, the state in the south of Brazil, with very big floods, reflecting the change in the climate in the region for the first time. And the sector that must talk on climate change now is the insurance sector, because why are we talking about it? Because now adaptation and loss and damage are on the table. So if not, they were probably not yet on the table with us. So that's why in Brazil, for example, this issue now is so relevant because of the disasters that are happening there. So about guarantee, I must say that you know that BNDES and KfW, the German National Development Bank, we had a very long-term partnership. It's a 60-year partnership, and we had a project together with them making a very interesting model when we go with the finance, with the loans, and another national development bank doing the guarantee to make it viable, the private investment in Brazil. It's a very interesting triangle, I can say, between two national development institutions, private companies, and loans. But, you know, Barbara, we were working a lot with CPI and the lab the last years, and some of the projects selected in Brazil inside the lab initiatives are related to guarantee. One of them related to energy efficiency, if I remember well. Another one related to biogas. And what are the similarities between these two sectors? First of all, they are initial, I can say, sectors with a few players, with a high risk and very spread in the territory. So most of the time when we tried to do a guarantee fund for this specific situation, we faced a lot of difficulties to make it happen because you have a few players. It's difficult to make the distinguishment of the risks between them and a very small group. So it's difficult to talk about a fund, but we tried it many times. But I will talk about a good strategy that we did for another sector. In Brazil nowadays we had a very interesting moment for the restoration on forest activities. When we talk on native forest, a biodiverse forest, some of them with very different business models. So what we did, we are using a lot of resources from the National Climate Fund. The National Climate Fund is a national climate fund, as the name says, but the interest rate is very low. For many, many years, the interest rate for native forest used to be 0.1% a year. 0.1% a year for economic projects, but the projects were not there. And we did a lot of hearing with the sector to understand the barriers to make it happen. And all of them, no, the guarantees is something, guarantees. And we tried, okay, let's try to see what we can do with a fund. Because, you know, during COVID, we did a very interesting experience using guarantee funds to do loans for small and medium enterprises. And it was a very huge success because it's all spread in the country for all sectors. It was a very difficult time with the COVID, and it works well. But again, we were talking about a specific sector with a few companies when we talk on forests. So we thought, okay, the problem is not the price of the money, because the price of the money is very low, 0.1. Now it's 1% a year. Okay, let's try to look at the guarantees. So what we did, we launched a few months ago, 2 months ago, a program called BNDES Forests to make how to make, not the standardization, because we are talking on how to standardize, but in this point of view, what we thought, now we need to make it customized. Because the guarantee in this sense must be customized for each business model. Because we cannot find one business model that are the successful one, because we have a very big range of business models. So depending on how is the sector developed, depending on the number of business models that we face in any part of the economy, we had different strategies for guarantee. In one way, we can do the funds, as we did during COVID for the small and medium enterprises. And in the other hand, probably in as I said, new sectors with few players, with different business models. We must do it tailor-made. We must do it, customize it. And that's why we did this new program in the bank, as I said, BNDES Forests, to make possible to understand project by project in a project finance perspective, what are the best guarantee for that project, for that business model? Are the carbon market contracts to be used, or let's do a collateral with other partner or other enterprise? So guarantee can be many things and many different models. So we are using our imagination and our innovative perspective to try to fit the best guarantee model to the difficulties or the challenges of each sector.
Thank you so much, Nabil. And I think that comes back to, I think, also why we found in our initial mapping just so many different guarantee instruments, because you still need to, you have different contexts and your different sectors and different geographies. So I think very helpful. Lars-Hendrik, just coming to you, any additional reflections also from what you hear here?
Yeah, I'd like to respond a little bit, if I may, because I don't want to take too much time. So, Ivan, I think it's great that the G20 actually next week is going to mention guarantees. I wonder whether this is the first time we've done it, but I think it's, and it's the finance minister. It usually gets accepted by the heads of states because normally there's no more negotiation. So I think this is a good sign. So that's very good. I think your idea about this exchange rate risk, we'll look at that. I understood this is for Brazil, if this is correct, but I think thinking about similar instruments, look, I'm just going to look at that, but also for EMDE, maybe we can learn something and expand it. I think it's the Treasury who is, in some sense, providing the guarantees together with the MDBs. Of course, that would be more difficult in other countries because not everybody has a strong Treasury. But I think, so there must be some international cooperation to do it, as you suggested. I think this could be something we could push and maybe next year also introduce. I think lighthouse projects, platforms, great idea. So I think we'll look at that and we'll be very happy. I think Olga, I think we talked already, MIGA, you said 17 different schemes in the World Bank. And so I think this also asks maybe further cooperation also with others outside the World Bank. I think this is an important issue. So we'll look at that. I think Anthony made a very important point. I think you also have done, I looked at that last night, a very incredible study on the role of insurance. And I think insurance and guarantees are actually very similar, you know. I think one interesting issue, what is private and what is public, because we've been talking about a market for insurance and what kind of risk is the, you know, even if they wanted to, and if they had the data, and London is of course big market for that. So we are more looking also at the public side. But you could also argue, you know, maybe the incentive should be there for the private side to do more of that insurance. And I think you say correctly, you need the data, but you also need to internalize the data into the market, or the risk into the market, as you're saying, so that companies actually do make the right decision. I still think there's a public side to that, so I think that, but something we can discuss, that it's not all, insurance is an important part, but I think there's a public role to play in that as well, and I think you agree. But I think that was a very, very important contribution. And I think Nabio, I think the cooperation between KfW and the Brazilian one, I think that's important, as you were saying. And I think maybe more of that. We did this in the G7 very often, that we were talking about, can we get our development banks cooperate a little bit closer? I'm not sure that ever worked, or it's working fully, but I think in particular, if you think about climate and SDG goals also, there's a clear role for cooperation. And the guarantee and the business model, I think Barbara mentioned that. That's interesting, because what you're suggesting, actually, that standardization is a bit more difficult because it depends a lot on the business model you have, but there may be still things you standardize which cut across, and there needs to be enough flexibility to control for the business model. So getting that balance right might be something we look at, but very interesting ideas.
Great. Thank you so much. Let's go to our second round, and again, still hope we'll have a few minutes for reflections from the floor. But Ivan, again, coming back on coordination, and you already mentioned the country platform that you launched, but I think you've also had a lot of experience this year in the G20 with working with other groups, not only the G20, but also the Finance in Common. So I'd just love to hear from you again how you think, what are some of the challenges of coordination, what is needed in order to, again, applying it to the guarantee context to really advance some of these, more innovative instruments like you have launched this year.
Thanks, Barbara. Well, we like to see the Brazilian G20 presidency as a dialogue-based one. And we tried a lot. We have, within the G20, not easy, even within the G20. And just to bring one of the deliverables to your attention is like on the way to build up the EMDE roadmap, we first needed to bring the agenda of discussions on EMDE's reforms to the center of the G20 itself, because it was not there. We had some reports, but it was around, not at the center. So first off, we needed to say, all right, let's have this conversation among G20 members on how we'd like the EMDE system to be in the years to come. Then we had to go to the banks and say, all right, let's bring you together with us. And then the heads of EMDE's group with IDB leading this year was really important in that sense. So we started a journey together with you and other G20 members on, all right, a lot of information out there, a lot of ideas, but where do we need to go? What is really relevant? How to build up on the three pillars of the roadmap, the better, bigger, more effective, operations, capital, and efficiency of the system. And we have created a full new track to deal with that. Essentially had a subgroup focused on EMDE reform, dealing only with the roadmap itself, so that the capitals could send the people, the specialists that really get to know the banks, development finance, and have the proper say there. And that's the way we moved things, and including bringing academia to a G20 meeting. For the first time ever, we had think tanks bringing ideas in the G20 meeting in Fortaleza, and it was not very comfortable for many members. We are government, so why are those guys here? But it was part of the process of dialogue. So ideas coming to the core of the G20. I'm using this EMDE roadmap process just to reinforce something that I think it is really important. And it's really important on the way forward when it comes to connecting G20 deliverables to COP30 deliverables. And guarantees definitely should be well placed as one of the instruments to be better reflected that. We need innovation. That's true. But most of the issues we need to do are there. As it was in the case of the EMDE roadmap. The ideas were there. But what we need is really to bring the strong push of the G20 together to have a vision and move. So in that sense, what I think we also need when it comes to instruments, including guarantees, but maybe some others, and including the platforms that right now we are pushing a lot from G20 to COP30, that is maybe a new wave of platforms could come, and including, new stakeholders, but reinforcing something that is absolutely critical in the process, that is country ownership. The way we built our platform is we ourselves, coordinated by the means of finance, but together with the means of energy, trade and industry and environment, having BNDES at the center since the beginning, connect to the private sector with defense since the beginning. We have built our platform based on our plans, on our interests, and assessing which subsectors were in most need of international finance to make projects come to fruition. It is a flexible platform. It is a platform that we can bring new sectors, subsectors in, new stakeholders depending on our assessment. And it is a platform for connectivity. It's a platform that we see as critical to connect to our GCF program next year, to our agenda with the CIFs, the Climate Investment Funds, on industry decarbonization, for example, but also in our connection with EMDEs. MIGA has rediscovered Brazil recently, and they're coming back very strongly. So a lot to do, including there are some ideas, good ideas from AJ on how maybe rethink about the portfolio of the World Bank, and how MIGA could be a key player in replacing loans to guarantees and giving some more room so that middle-income countries could do something with the World Bank that is more strategic and maybe in our case better connected to our country platform, so that we can have maybe a couple of billions from the World Bank financing, or IFC, for example, given the very strong role that the private sector is going to play in our platform there in Brazil. So there's a lot to be done, but my point is we need to bring people together on the same page, in the same room, and move together. Instead of just, maybe the point is, let's connect initiatives. Let's connect them as much as possible. Let's use the tracks that we have. You have the G20, you have the South African presidency out there, we have this agenda of COP30 in Brazil. Then we have the Coalition of Finance Ministers for Climate Action, that we really want to reinforce those discussions. Where should we place finance ministries, and should be at the heart, that's our point from Brazil, of this conversation, and go to the specifics. Again, something that I'm really proud of is that we could really, during our G20 presidency, fulfill a commitment that we had with the minister himself, that we'd like to have a concrete G20 agenda. We don't want the G20 just with the statements, broad, general, that could be useful for political reasons and high politics. We want the G20 to go to the daily lives of the citizens and deliver concrete agendas, solutions. We have delivered the roadmap together with you. We have delivered the agenda of reforms of the funds. We have replaced country platforms in the agenda in a new way, with new principles, reinforcing country partnership, and country ownership, and partnerships also with key banks and funds and the private sector. And again, going to the specifics, so understanding better the instruments, the needs, the sectoral approach to guarantees depending on the country. Maybe on energy we should focus on SOEs in some countries, and utilities guarantees, maybe in another sector could be another thing. But my point is, a lot to do when it comes to action, and let's be together as much as possible, connecting all the dots, G20, COP and everything, including financing commons. So in that G20 presidency of dialogue, where we brought the banks, we brought the other invited countries, G20 to the table. We also could connect better to national development banks, and as we understand, the South African presidency really wants to build on that. That's great. So there's a lot to do on how to better assess, including assess risks at the project level, in better connecting to national development banks, the subnational development banks. We in Brazil have a variety of banks that are really important in financing our development there. And so this is pretty much a call for action and for getting closer together, all the initiatives, so that we can really move. We need to move. And definitely guarantees is one of the instruments that's going to make us move, especially when it comes to mobilizing private sector money into developing countries like Brazil. Thank you.
Thank you so much, and I think reflects a lot what Lars Hendrik had said before. Let's not reinvent the wheel, let's really move. I think this initiative here is really here to build this connection, so I think this is great. But Olga, let me come to you. You bring a lot of experience also in overseeing projects in different regions. Just love to hear a little bit if you have any kind of lessons from how to address some of the coordination challenges, or at least understanding what the challenges are, so then maybe we can think about the solutions.
Yeah, quite a lot to say about that, but I thought maybe just to reflect on a couple of things, because I think we have a bit of a coordination discussion going here as well, because we just on this panel, we talked about 5 different risks probably, right? About foreign currency risk, current country risk and credit enhancement, climate risk, and several probably other risks implicitly. So I think it's very important to maybe distinguish 2 things. When we talk about standardization, at least when I was talking about that, I think it's difficult, and here I agree with a number of speakers, it's very difficult to fully standardize the product, because everything starts, as Nabil said, with actually assessing which each project needs, right? And then trying to give the right antibiotic, as Anthony said. So finally, and even the World Bank Guarantee Platform, bringing together all the guarantee instruments, does not mean that we're going to collapse them in one guarantee product, no. But it's helped to create a taxonomy, sort of a bucket of similar products to help the audience, the project developers, the banks, the governments, to understand that there are these large groups, but within these groups, broad groups, there are specific products that can really help address specific risks in the most cost-efficient way, right? So at the same time, standardization, where standardization is very important, is in the methodologies, right? To, again, improve transparency, to enable collaboration, because if each project with multiple participants has to sort of deal with 5 sets of methodologies, that increases the cost, complexity, headache, and so on. So I think that's just, I wanted to clarify that. And in terms of collaboration, public and private, I don't think it's, well, either or alone. I don't think anyone is suggesting. But in case of MIGA, it's very much a public-private story, because yes, we are providing guarantees, and this is an MDB guarantee, but 70% of MIGA's portfolio of 30 billion is reinsured. And so we would not have been able to provide $700 million guarantee to Banco do Brasil for no-till agriculture, essentially sustainable farming, if the majority of it were not reinsured in the Lloyd's market and in other markets in London. And so here a number of things happen. We are mobilizing the insurance industry through the reinsurance, both treaty and facultative, so that's one thing. And with that, actually, the insurance market accepts MIGA's underwriting, so our risk assessment methodology, our environmental and social standards. So there is that sort of, sharing of methodologies and standardization and collaboration, as it were. And so I think an important point here is ultimately, if we are to scale guarantees, right, and insurance is essentially a guarantee with conditionality, so I'm using those interchangeably. To scale that, a lot of it will end up in the insurance and reinsurance market, because I think the MDB community, the public sector, has only limited ability, right, and limited capital to keep it on our own balance sheet. And so it is and public and private. It cannot be otherwise. So in terms of collaboration, I would just very briefly say there is a lot of action, especially in the last, I would say, year. In the region that I cover, Europe, Central Asia, the World Bank has signed MOUs with EBRD, right, and ADB, which both active in the Central Eastern Europe and Central Asia region. And these are not kind of, feel-good MOUs, right? Our management really expects us, and we have been working on essentially putting together specific action plans on how to leverage each other's analytical work, right? How to align on policy messaging, on sector reforms, and really divide and conquer, not in a way that there is so much to do. Let's decide which institution is best positioned to support which type of projects, which type of sector. So there is a lot of that. And another example, I think, the recent signing by KfW and the World Bank Group, a co-financing agreement, right? Which again will facilitate that, financing of large projects, which, many of them for the World Bank probably, all of them will have to be Paris aligned, because that's our commitment to the world. So thank you.
Right. Thank you so much, Olga. I think really good to see these concrete examples and see what's already happening. And I think you're right that, we continue to hear that. I don't think everything needs to be standardized, but I think there's methodologies, there's categories, taxonomies that really can do that. But Anthony, collaboration, but particularly now that the insurance industry woke up, What are your thoughts on how can you also better, collaborate? Particularly, I think, with the public sector. I think a little bit to Lars Hendrik point there.
Well, first, I promise I'm not going to throw any chairs around again this time. I've been sitting here since thinking, God, what happens if I'd injured one of my co-panelists, and sort of hoping they'd got good liability insurance. I've got good liability insurance. There's a lot to cover. It could get into a lot of the technicalities. I think that is to come, and I think certainly by Belém and COP30, we really want to be in the technicalities, if you like. This COP for us, and we've been working for the last year to really land this message, which we're doing today and tomorrow, and the report that we published today, the great enabler, or hashtag the great enabler, if you want to go on social media, please do read it. But it is built on a number of other white papers that sort of build the case. But what this paper does is it sets out very clearly you simply cannot mobilize the climate finance, and within that I also include adaptation and nature, without this paradigm shift in the insurance industry. If you don't accept that and bring insurance to the table, I'm sorry, you're going to fail. You are simply going to fail even if you get the target. But the good news is there is the insurance industry, and probably 70%, as I said, more of the actual insurance mechanisms exist. It's not what I thought a year ago when we started down this road, that actually we need, the reason insurance wasn't really here, de-risking, the reason risk was such a major barrier to the finance flows is because, clearly the insurance products can't exist. But actually they do. It's just this massive disconnect between finance and insurance. They're at two different strategic levels. Insurance has not been at that top table, and it's as much about the demand side understanding this and waking up and educating itself as it is on the insurance side. There are also some other, these are good points that have just been made, but what we think is going to happen if this doesn't happen, so if we don't wake up to this and the thinking longer term about capacity within the market, is we are going to hit a very hard wall where there will not be enough capacity in the global insurance market, because demand is growing, volatility is growing, and at the moment the insurance industry works in this 12-month cycle. And it basically then thinks, well, how much capital do we need to draw in from the global capital markets each year based on the claims, and the premiums in the previous year. But what it's got to do is start thinking 10, at least 5 years ahead in terms of that demand. Otherwise, we will have a capacity crunch. And I think that's really important to understand, because there's 20 trillion committed between now and 2030 to decarbonisation, but we can only see capacity in the market for half of that. And you won't be able to do those other projects without the insurance capacity, so you will suddenly run into a brick wall. When we talk to major banks who've made very ambitious commitments. We spoke to one a year ago, and we validated this across many of the others. They made a commitment to mobilise 5 trillion by 2050. Brilliant, with some very clear milestones along the way. But the banking teams are just not doing it. When you speak to the banking teams, what comes back is, I'm sorry, for every 30 green deals, only 1 in 30 gets over the risk hurdles. So I'm not going to have my banking team working on 30 deals I know are not going to close, because you'll sack me basically, and let alone getting a bonus. So we've got to deal with this structural issue. The public-private piece is really important. I mean, if you take it back to basic principles, what insurance is a collective decision by society how to pool risk. And that can be public, social security systems, pensions, social health systems. That's insurance, it's public insurance. Or you can have a hybrid, or you can have private. And that's a decision we make as a society based on how we want to go forward. In the developing country world, what I'm still trying to understand is, why aren't we applying those same principles of blended concessionary finance to insurance? Why are we thinking that we can build sustainable financial markets in those countries without a commercial insurance market in country. And so why are we not trying to build that side by side with local finance capacity? So I think these are very critical questions we have to start asking. But I also come back to this price in the risk point. While the insurance industry is stuck in this 12-month renewal cycle, it has no incentive whatsoever to do its job properly, which is to create a forward price curve on risk. It's not necessarily about more data. It's about how we take the data and work out how to start going from a backward-looking world, which is what we've done until now, to understanding how we use that data and tools like AI and scenarios and pathways and everything else to price risk on a forward basis. What I think has really excited me actually is the insurance industry in Brazil with the Federation of Brazilian Insurers, SENSEG, really driving this in Brazil. They're going to have a house of insurance in Brazil. They're really determined to put this issue on the agenda. And what we want by COP30 is we don't just want everyone to wake up to this issue. We actually want a tangible pipeline of lighthouse projects where insurance is sitting there de-risking and showing how those can happen. We want an industry-backed, and that's both demand and supply side, enabling framework for climate insurance. That's the end goal for the breakthrough, the 2030 enabling climate insurance breakthrough. So Brazil, COP30 is incredibly important in this context.
Fantastic, thank you. And again, I've been very impressed by SENSEG in Brazil, I think. And I've actually been a part of a conversation last year where they were not yet at. I think you're right that this year, I think there was a mind shift both through the leadership, the country ownership in Brazil, but also through the terrible impacts that have happened. But it's great to hear. I can foresee a lot of bright lighthouses next year at COP, so that's good. But Nabil, just again, we've heard from governments, we've heard from MDBs, from MIGA, we've heard insurance, NDBs. You obviously have been coordinating, both through clubs like the International Development Finance Club. How are you kind of seeing this collaboration, coordination between NDBs, the broader network of public development banks and MDBs? So what is your thoughts there? How can we get better, particularly again related to guarantee mechanisms?
Barbara, as we are a 70-year-old national institution, we had a relationship in different levels with financial institutions inside Brazil and outside Brazil. For the ones here that do not know how the financial system in Brazil works, we had a very strong public development banks, subnational ones. So we had the Brazilian National Development Bank, we have subnational development banks, and we have a very strong and big private financial market in Brazil, very well structured. So it's not a competition between them, it's something complementary between the public and the private sector. But what most differentiate us from us, when I say us, the public institutions for development and for finance for development, is in the sense to look to the sectors, as I said, look to the difficulties, the challenges, and the opportunities for a specific group of companies or initiatives that aims for develop, how can I say, the group, not individually one enterprise by enterprise. So I will say something different that I said at the beginning when I talk on the make it tailor-made, the guarantees. I would say talk now about how to standardize some things. Just to say it is possible to make a connection between these two worlds. And how? First of all, when we are talking at the beginning, so at the initial phase of the sector or the initiatives, probably we will need this more flexible view on the guarantees and tailor-made view. But once we saw one or two business models that are most suitable for that in issue, and I will give an example. We did it for the renewables in Brazil, the wind power. We used to have zero wind power in Brazil 10 years ago. And two important things were done to make possible nowadays for us to have more than 50% of our energy generation made by wind power. And are two things. One is related to the government and the regulation, how to make this, the regulatory framework, the prices, the auctions to buy the energy. So this is in one side. The other side is related to the guarantees specifically. So once we saw the right business model to the sector, and it was most related to the long-term contracts that the companies did with the government and a cascade of accounts to make it happen, we standardized it. Okay, for these sectors, this sector, the wind power sector, we saw this is a good way to make the finance and the guarantee. So the long-term contracts, the cascade accounts, so let's work on it. So that's why we were able to have a scale in one hand, and in another hand, the deliverable, the renewable energy in the economy. So that's why I talked about the forest. We are a step back. We are feeling the ground to understand the business models, to understand how this can be linked to the EcoInvest, how can this link to the country platform, how can we link to other initiatives, as Ivan said, looking to the whole situation, and then probably 2 years on, 5 years on, probably one or two models can be the best fit for the sector, and then we can standardize and make it in a scale. So just to say, both things at the same panel, and so thanks again, Barbara, to share the panel with you and all this team.
Great. Thank you so much, Nabil. Lars-Henrik, over to you.
I think we're almost out of time. I just wanted to thank you. I think please look at our paper and see if we take this forward. Just one or two things to sorry to what you just said. Since I've done 10 years, I was a German Sherpa for 10 years of the G20, and I think the G20 is really at an important point. I think what you said about dialogue, and I think one of the important things, and I hope you have a successful summit next week. I know they're still negotiating, my former colleagues, and of course the leaders will have to decide in the end. That one thing you've done fits your story, your narrative. You've actually been very inclusive. You've also invited lots of other countries. That I think it was also important for your president. And I think that's a very important part. I think that if we want to get further with this, I'm for the first time at COP. Actually, I've been at every G20 for many, many years. This is a different community, just looking at it, than what's running around at the G20. So I think this Brazilian idea of expanding I was always against it because I think it should be focused. But I think today's problem need to think carefully about this dialogue and expansion. So I think this is very good. I couldn't stop, but I think this is a very important point. Olga, thank you. Absolutely right on the template and taxonomy. Shows how little I know about this. So I think this is very important. I think, Anthony, risks, and we agree, insurances and guarantees are similar instruments. But I still think not everything can be left, you didn't say that, to the insurance industry. There's a market failure there, and of course more should be done and all of it should be used. But I still think, even from a practical point of view, an implementation point of view, the proof of the pudding is in the eating. I think there'll be some rest where you need some public guarantees, which also have their difficulties. So I think we need to push both. We need to push the insurance industry, but we also need to keep an instrument there at the public side for remaining issues. But I think we agree on that. I think that's what I wanted to say, and thank you, Barbara.
Thank you so much. Just very briefly, I'm going to just like share a few of my reflections from this panel, and then I heard we have to leave all the room. But I just said, like, first of all, thanks to everyone. I think this was a very rich discussion and lots of really good insights. I think what makes me most excited compared to a COP ago is that the conversation on really thinking about how to make guarantees more effective has started. It's shown in this room here. I think we will be working on that to improve step by step. We have heard about a lot of experiences. Now the question is how can we go from pilot to scale? How can we really make sure that we can unlock private capital at scale? I think what I've heard is it's about standardizing, particularly around methodologies, frameworks, but also customizing and making it tailor-made depending on the sector, the stage of the sector. It is about going deep, really understanding the specifics and the needs of the sectors and the countries. And then second, it's about innovation, but also about, I call it socialization, so really bringing people together, like sharing, the examples and really making sure that we move together. I think key for me, what I've heard is domestic ownership and real inclusive collaboration. Key is data, sharing data as well, and thinking about how we can do that more effectively. But key is also capacity. I think that's something we need to really think about. How can we accelerate that? Just to end again, lots of lighthouse ideas already. I do want to just repeat again, it's not necessarily only about new ones. Let's think about what has worked. How can we replicate those in other countries, or like how can we come up with ideas? And we will be reaching out to you just to get your thoughts and ideas, and hope to be working with you. So join us all in the GGG endeavor. And so thank you so much to everyone here.
Welcome to the German Climate Pavilion at COP29 in Baku. Germany. Climate solutions, fast and fair.